recording from here. So if you have any pair you want us to analyze together, you just let me know. I'll do that. Today we're not going to take so much time. All we need to do is show you. I'm going to delete this. You know, last time what we talked about was how to use rectangle strategy. And I'm so happy that somebody showed me what she has been using it for other like indices and stocks and all that, and it works for her very well. It's even a she. I didn't even know. I thought it was a he, and she said no, that she's a she. And she's really doing well using the strategy. So it's not about teaching you this. What matters is you go back and you practice it. You do your demo practice and you see how it works. Like I told you earlier, this strategy, rectangle strategy, is 95% accurate. But all it needs is just your patience. You need to be patient with it. If you're not patient, you cannot do what? You can't go with the strategy. And because it uses the higher time frame, so you need to be very accurate with your what? Entry point. Imagine you enter the trade from here. As soon as this thing closes and you enter a sell, and you want to take your take profit around here. So imagine that you're going to make serious money from this place down to this place. Let me use this. You entered from here, and you took your credit, you took your take profit here. So your stop loss can be just something above here, very, very little. So, but you need to be very patient. It's not something that you just, imagine this broke out. You saw this breakout here. You have to wait for it to do what? Come back to retest your pivot level like I taught you before you go to the next one. So we're not talking about rectangle strategy today. We're going to talk about this strategy. Is called, we're using it for the scalping strategy. You can use it best on 15 minutes time frame. I'm going to use my laptop, but as you can put it on your phone. What I use for this strategy is 15 minutes. You use it on your 15 minutes chart because it's a scalping strategy. You don't stay long in a strategy. You can just go with 50 pips, but if you are consistent, I posted something in the group that if you can be consistent, focused, and disciplined, 6 months is okay for your life to change in anything you're doing. Consistency beats talent every time. You might be very good, you know all the strategy, but you're not disciplined, you're not consistent in what you're doing. You will just have the talent in your head, but the result is not going to show. But if you are consistent and you're disciplined and you're focused to a particular goal, that, okay, every day I want to just go 50 pips in the market and I'm gone. And as soon as you make your 50 pips, you're gone. You're focused, you're disciplined. If you do this consistently for 6 months, trust me, you will see that your life is going to change when it comes to trading. Not everybody have the patience to trade, but that doesn't mean that you cannot earn in the forex market. You can be an investor, you can also be a forex trader. But in forex trading, any which way you want to do it, if you are disciplined, you're going to earn from this market. Now, I'm going to use the moving average, EMA moving average, exponential moving average, and the range you are going to use is 14-day range, 50-day range, and what? 200. You can add 800 if you wish. That is, if you're using your laptop, you can add 800. But if you're using your phone, 800 will be very far for you to identify it. But what I use mostly for it, if you're using your phone, if you're on the road, you don't have a laptop, you just wait for some things to happen, and that is it. So now this is my laptop, so I'm going to come and look for how to get my indicator. I don't need a template. So on your mobile phone, you look for moving average exponential. I think I need somebody to be an admin, host, so you can admit people in. Who will indicate? Please indicate on the chat if you can do it. So you help me admit people, because I'm using my phone and it's kind of distracting in case I take my eyes off it. So people will be waiting at the waiting room. So please indicate so I can make you a host. Okay, Mark, thank you. I'm going to make you a host now. So you help me admit people. Okay, please. Thank you very much. All right, Matt, you're the host now. So help me admit people coming in. Thank you very much. I appreciate. I hope your internet is steady. Now, on your mobile phone, you will see moving average. So you have to change it to not just simple moving average, you have to change it to exponential moving average. I don't want to use my phone for this because I won't be able to record it. I don't know how to use it on an iPhone, so it'll be difficult for me. That's why I had to do this lesson using my laptop. But on your phone, I was supposed to use my phone for this class, but because I don't know how to record on my phone, I told you earlier, I'm not a techie person, and Mr. Femi is not here to teach me. So what you're going to do, I will use my phone by myself here and look at how to add it up while I teach you this. So now when you get to your phone, you click on moving average. Like here on your laptop, you see moving average here. This is a simple one, and this is exponential. But on your mobile phone, you're just going to see moving average. So you change the method to what? Exponential on your mobile phone. So the first thing you do is click on moving average. I'm going to add 3 moving averages because I'm using 3. Okay, let me add 4 because of the 800 I talked about. For those, okay, more indicators. Oh, I need to do the, all right, never mind. So now you can look at on the left side of my screen, the moving averages have appeared here. But on your mobile phone, what you're going to see is period, shift, method, level, style, apply to. So on your period, because you're going to add it 3 times on your what? On your mobile phone. So your period, you change the first one to what? 14 period. Leave the shift at O. Then exponential, you change it from simple to exponential. Apply to close. Then your levels, you keep it at, you don't add levels, you don't need levels, leave it the way it is. And your style, you leave it at, and you can change it to any color. So now I'm going to change this. I'm going to edit my own. I'm actually looking at my phone to edit it, because I'm adding 3 moving averages. So the colors have to be different. So you can use to identify which of the moving averages that you're using. So on your mobile phone, you can use your 14 as blue. Look at what I'm trying to make it thicker. So I'll leave it like this so it will be a bit thicker. Let me put it this way. So I'm going to change this 9 to what? 14. I'm leaving it at close. Offset 0, same as chart. Just click on what? Okay. So you can see on my left, it has changed to 14. Then I do the same thing for the second one. I'll change it to 50. This time, make sure it's a different color. Let me change this to red because the other one is blue. So this link together and change and make it thicker. Okay, and you click on OK. And this other one is 200. Change it the same way I'm doing on my system. You do it on your mobile phone. The style, what color is this? Yellow. Okay. Let me change it to dark green or black. Let me change it to black because my background is black. Okay. All right. I like the 200 to be thicker because that is where my take profit is. Okay. So I've changed my inputs and I click on OK. So let me reset this chart so you can see what it looks like. Now remember the 14 is the blue line, the red is the 50 moving average, and the black is the what? 200 moving average. And remember you are using exponential on your mobile phone, exponential on your mobile phone. Now this strategy works for every time frame, but because it's a scalping strategy, it's better you use it on what? The lower time frame, which is 15 minutes. Now, but the first thing you have to do, the rule number one, is you go to the H4 just to check where the trend is. Now, the rule number one is this 200 moving average acts as support and resistance. Let me type it so those can take it. Rule number one. Please help admit people that are there, okay? Matt, thank you. The 200 exponential moving average acts as support and resistance. Resistance level. So I want you to have that in mind. Then the rule number two is, because before you can scalp on this strategy, no matter how scalping strategy is, it's always good for you to be on the trend. Remember what it says, the trend is your what? Your friend. The trend is your friend. And because I use 15 minutes to take my trades, I prefer H4 to check where the trend is actually going to on this chart. When I look at the trend on the H4, I'm not analyzing anything on the H4. I just want to know where the trend is at that particular time on the H4. And after that, I go to the 15 minutes to take my decision. So rule number two is, if price, to know the trend of the market, know the trend of the market. I hope we all enjoy our holiday. Don't mind me, I was bored at home watching horror movie. To know the trend of the market, the 200 moving average is the benchmark. Price is above the 200 exponential moving average, we are looking at an uptrend. Price is below the 200 EME, we are looking at a downtrend. So, looking at this chart on the screen, you know, I love interactive class. Tell me where price is actually now. Is it coming down? Should we look for a sell or should we look for a buy? Please go to the chat box and type your answer. So let me know that you guys are following. Go to the chat box and type your answer. Remember, the 200 moving average is what? The black. All right, just three people. Frances, good. Frances, bye. Yeah. Stephen, okay. Jeremiah, good. Now we're looking at that uptrend. Okay, Ibrahim, yeah. Jazzy or Jay-Z. Okay, thank you. Yes. Now the moving average is what? Is below. The price is below, is above the 200 moving average. So we're looking at what? For buy opportunities if we go on the lower time frame to check what's happening. Even if you come to D, let's go to D and see where price is. Price is still what? The 200 is still what? Below. Price is below is above the 200 moving average. So now what you're going to do on 15 minutes is to look at more of buy opportunity. Remember, I told you that this is just a scalping strategy. All what you need 4 hours to do is to check where price is so you can know what to look out for if you're scalping. You don't just scalp because you want to scalp. You know, scalping requires a bigger lot. So if you're using a bigger lot to scalp because you're not staying long in the market, maybe you're going with 10 pips, you're going for 20 pips, 15 pips. So you can see most people, they just use bigger lots and they take the money and they leave the market. So, but you need to be, every strategy have a what? You have an entry, when to go in and when to come out. You don't just enter because it's a scalping strategy. No. Now, the rule number 3. Now, I remember what I told you. You just need the H4 to know where the trend is. Now, you can see here that it has always been an uptrend. Price is above the 200 moving average. When it broke out here, it was below. It came back up here. It has been above the moving average ever since. It has been consolidating here till it broke out. And after breaking out, remember we took this buy and we went out somewhere around here. It rejected it. Remember I told you the 200 acts as what? Support and resistance. So look at what happened here. It goes off here, breakout, and it has broken out of the 200 and retested it. So now what we're going to do on the smaller time frame is to check for what? Buys opportunity. So now I'll go to the 15 minutes. And now even the 15 minutes have its own rules and regulation. Now the first rule for the 15 minutes is this. Let me type it. Now, rule number 1 for this scalping strategy. Moving average, exponential moving average. I want you to know that it's exponential we're using, not simple. Exponential moving average. Scalping. So rule number 1. This strategy is simple. For you to take your trade, your entry point is you have to wait for the 14 to cross above or below the what? The 50 moving average for you to take your what? Either buy or sell. Now remember that we are looking for a buy opportunity for this. So for your entry point, you wait to see the cross. The 14 EMA has to cross and close above the 50 EMA before you can take your buy. I'm going to explain this. Let me reduce 1 minute. I think it's better now. Okay, I hope you all can see it. Now let me start here. Remember, this price is now above our 200 EMA. So what we're looking for is buy opportunity on this pair. Now let me start with I'm going to show you an example with the previous, what has happened in the past. Then we'll predict what's going to happen in the future. I hope you all are following. Now see what happened in the past. Look at my left here. Let me start with this crossing. Before you can take a buy, let me open. All right, let me use this. I want a very glaring. All right, beautiful. Let me use this past to show you an example. Remember, the blue is the 14 EMA, the red is the 50 EMA, and the black is the 200 EMA. Now, the black acts as support and resistance, like I told you. If price is above the 200 EMA, it shows that we're going to look for buy opportunities, that is going on an upward trend. Now, using your 4 hours time frame to measure it. If price is below the 200 EMA, it shows that what you are looking for sell opportunities when you want to take an entry on the 15 minutes time frame. Now I'm going to use here as a beautiful example to illustrate. Let me use the brush I'm going to use this place as a beautiful example to illustrate what I wrote earlier. Now, you can see the crossing glaring in your eyes here. The 14 crossed above the 50. And before this crossing will happen, you will see that price is what? This big bullish candle must have happened, and this cross happened here. You can see the cross here. The 14 crossed the 50 EMA. And what happened? Price closed what? Above the 14 EMA and the 15 EMA. So this gives you an indication that I'm looking for more buy opportunities. There are two things that can happen on how you can exit this entry, this strategy. You can either calculate the number of pips you want to go for. If you are using this for a long-term trading, maybe an intraday trading, what you should look out for is, that means you have to be looking at your phone all the time to see when price closes above or below your 14 EMA, which I don't always advise that, because it gives the trader, you put your mind so much on this on your chart, and you forget to do other things that you want to do. That's why I said it's good for scalping. You just put your stop loss and your take profits, and that is it. And you go. If it's 50 pips is your stop loss, 50 pips is your take profit, you do it that way and you go. If it's 10 pips, you do it that way and you leave the market. Now, this is the crossing we're waiting for. 14 crosses above the 15 EMA. Remember this? 14 has to cross and close above the 50 EMA before you can take your buys. Now, this candle has pushed up, and that was why this cross happened. And it closes above your what? Your 14 and 15 EMA. So what you should do is take a buy as soon as this candle closes. You take your buy and you what? You pick your stop loss. You take your take profit. If you're doing 50 pips, if you're doing, remember to put your chart, the pair you want me you want us to look at using this strategy. You can still put it on the chat box. After showing you on gold, we can as well show it on other pairs, so you can look out for what to do. Now, this closes above it, you take your buy, instant execution. There is no limit order using the strategy. It's an instant execution. You don't do a buy limit or a stop or a sell limit, or a buy stop or a sell stop. All you need to do is what? Your instant execution. So now price closes above this, and you take your instant execution buy, and you decide to go for 50 pips. As soon as, let's say you enter somewhere around here, and you decide to go for 50 pips. So that's 2. Okay, somewhere here. So this candle alone, let me use a horizontal line. I think I should get it. All right, let me say you entered here. Let me use another line, a horizontal. You entered at the close of this candle. So somewhere, maybe your broker pushes you up based on your spread, and you entered at the tip here. So this is 18. I need to change this color. Let me change it to blue. Just give me a few minutes. Okay, so we entered at 1861,768. So we're just going for 50 pips, and 50 pips should be somewhere around 1866, if I'm not mistaken, 1866 thereabout. So your 50 pips should be somewhere around this blue line where I entered. So you can see how simple and your trade can be. You need to practice it. So you take your entry here and you leave this place. Your stop loss is the candle you entered, that the candle that closed above your 50 and 14 EMA. Your stop loss should be below that candle. This is where your stop loss should be, below this candle. The candle may not be as wide as this. This is gold. That's why it may not be as wide as this. So this is where your stop loss is and your take profit. Remember, this is a scalping tool. Another way you can exit this strategy is you always look out for, since the price is closing above, is still on top of your 14 and 50 EMA, you still have a chance of doing what? Still being in the trade, meaning price is still above my 50 and 14 EMA. As soon as price closes below, like this one you're seeing here, like this one, price closes below your 50 EMA, you exit the trade. Do you understand what I did? Let me delete that last one I did so we can do a bigger circle. If price close, this is the second way to do what? To enter the trade. The first way is you enter your trade here, you exit at any desired pips that you want to. If you want to do 50, if you want to be 20, 30, 100, depend on you. You can exit. Another exit way you can exit from this trade is you watch it. As for the fact that price is still above your 14 and 50 EMA, price is still closing above it, just like what you're seeing here. Price is still closing above it, it's not below. You are still in a good opportunity. But as soon as you see that price has come down here and this happened, it closed below your what? 50 moving average, which is this candle we're seeing here. Exit the trade, because by that time you will see another crossing to the downside. You understand what I mean? You see another crossing. Why I say this is a scalping strategy, because by the time price is consolidating, you will see different crosses like what you're seeing here. So you might not know what to do. You might decide to, oh, this is consolidating. Unless that's why I taught you first how to study price action before you can know how to use other strategies. Now you can see, since we already know how price action works, anybody that sees this, we know that something is happening here. Price is going in a sideways form. So it's either for me to exit this trade. Let me cancel this. Anybody that sees this, how the way price is moving, you will know that there is a sideways movement. After something of this nature, you now see something like this. Then this. It will tell you that, oh, this trade is going a sideways way. We don't know what's happening. It's better exit the trade. So these are two ways. Oh, I missed something. See this candle here. This one closes below my 14 EMA. So you can still exit it from either here or here, depends on what you want. But if you see something of this nature, a glaring picture this way, it's good for you to what? Exit the trade. But the number one thing you should understand is, first, go and check on your 4-hour time frame, what is the trend? What is the trend? I think I deleted all those things I wrote. To go back. Okay. Let me go back to my H4 if it's there. Just 1 minute, please. Okay, beautiful. For the benefit of those who want to. Okay, so that is how simple this scalping strategy is. You don't need too much analysis that leads to paralysis. Just your eyes for you to see, okay, what am I doing? What am I looking at buying, or am I looking at what? Selling? Because if you don't know what you're doing, you have to, that's when you're going to be a bit confused. Now, we've seen in the past how to enter this, but let's look in the future. What's going to happen? Remember, on our H4, we saw that price is above the 200 EMA. So we should be looking at what? Buy opportunities for using this strategy. We should be looking at more buy opportunities. Now, when I come to the 15 minutes, I will see that price is still above my what? 14 and 50 moving average. This is actually where, if I taught you this earlier, since that price has left here and came above the 200 moving average, this tells you that what? Price is going to start buying. Okay, so this happened and this crossing happened. This tells me that we're moving on an upward trend. So what should I do? As soon as this happened, let me use this. As soon as this happened, you enter from here and you take your what? Your buy opportunity. So from here to here must have given us how many pips? Let's count it. Let's say you pick from here. This has given you think 68 pips, almost 100 pips. It has given you 68 pips. So if you are going for 50 pips, it's okay for you to do what? Exit the market and you make your money. I remember this is your take profit, where you're going to have your take profit. I need to change this in 1 minute. Oh. So let's say you exited here. Remember, your stop loss will be on this candle that you enter. This is the last candle that caused the crossing. So your stop loss will be here, below the last candle that made the crossing. This last candle. That's where your stop loss will be. Then your take profits is your desired. You either exit at your desired pips, or you allow the price to keep going. As soon as price closes below 50, 14 or 50 moving average, it's time for you to exit. Because by the time price keep coming down, this moving average will start twerking to come down to the downside. So be on the safer side is choose the desired pips that suits your what? Your risk management, your portfolio, and everything that you want to do. So you can just leave. That's like this 2021 that is coming by God's grace. I want everybody to be disciplined while doing their own trading. Nobody has actually showed me the charts, any pair that you're looking at that you want to take. When I told you I'll finish, what's the best time you come in to scalp gold? There's no best time to scalp gold. Anytime for scalping, as far as you have seen the strategy, the crossing that's happening, you take your trade. The crossing is what happened. There's no best time. If you see what, like if you follow what I said earlier, and you see it happening here right in front of you, using this strategy, is for you to do what? Enter and go and trade yourself in the market. There's no best time to trade gold or or I don't have a best time. I just go and see what's available in the market. If there's opportunity, I do what? I take it and I go. Is it advisable we should start trading from tomorrow? I can't give you that because I don't know. Me myself, I'm trading from second week of January, because by the time we go to the next year, there's going to be a massive gap in the market. So anybody trading there, the gap can be against you. It can be your favor. 2 years ago, it happened. There was a gap of 600 pips in every JPY pairs. It favored some people, it blew some people's accounts. So it's always good you close for the year and start your new trading as soon as the market opens. So the beginning of each year, the market is always very volatile. You'll see very, very massive gaps in the market. So maybe you are buying, expecting price to get to a particular place, and the market gaps against you 1,000 pips, 600 pips. That account is gone if you don't have your stop loss and all that. So because I've experienced that 2 times, so I prefer to close early before the Christmas, then resume second week in January. By then, the market is stable. Businesses have started going on well. People will now want to start making money and doing other activities, because you can't have holidays all through. So I can't give you when to start trading tomorrow. It depends on you and the choices that you make. Okay, Euro GBP. I won't advise anybody to trade Euro GBP now because, one, the Brexit deal has been signed. So we don't know what's going to happen. And I've not read about the Brexit deal. Who is it going to favor more? Is it the European Union or is it the UK? I need to study about it, then I know. But you can do it yourself. Go to Google and study about the Brexit and see what other politicians are saying about it, other people, advisors and all that. Who is going to favor more? Then you can determine the pair between euro and pounds, which one is going to be very strong. Because if euro and pound is strong at the same time, what you'll be seeing in the market is more of consolidation. So if I won't advise anybody. Francis, you've not been in my class since for you to be asking me gap. Are you a new person? I'm sure everybody knows what I mean when there's a gap in the market. The gap in the market, what I mean, there's a gap. I'm sure for you, Jamu, you understand what I mean by Euro GBP, right? But I'm still going to show you. Gap in the market is something like this. Let's say in December 31st, the market closed somewhere around here. This has not occurred, or here. Then by the time the market opened January 2nd, you see that price will come here and open. So from here to here, there'll be a big gap. You won't see any price action here. You start seeing from here. So imagine you were selling here. Let's say you enter this market somewhere around here and you've made profit. You're selling, you did not secure your profit. Then in the first week on January, price came above to this place. What happens to your account? Your account is gone. Depends on the lot size and depends on what, if you don't have a stop loss, your account is gone. If you have a stop loss, yes, that money is gone. So that is what I mean by gap. There are some gaps that you can see 600, like 2 years ago, all JPY and Australian dollars, Aussie, they all had a gap in the market of about 600. The minimum was 600 pips. So imagine having 600 pips exposure. There's no price action happening around here. You should know what is going to happen. So if it doesn't favor you, if you're against the market, so many things is going to happen to your account. So it's advisable you just close for the day, and in the new year and the new week, you look for better opportunities to enter the market. So any other question before I move? Now this is gold. Based on this strategy, we're looking for more buys. So since that this has crossed here, this is the first, this is the second, using the minutes time frame, 15 minutes time frame. The rule is wait for a crossing, which is this. The crossing has happened. Wait for price to close above, which is this. Price did it. It closed above this. So what you should do is to take your buy. Now, since that we missed this, but price is still up above our 14 moving average, we're still looking for more buys. So if market open and you decide to take gold, you just buy it and you scalp a little bit, 10, 15, 20 pips, 50 pips, and you leave the market. Remember where your stop loss is now, because this is too risky, because your stop loss will be very wide, somewhere around here. In scalping strategy, your eyes needs to be on your phone, because you're scalping, you're not staying long in the market. So if you take this trade now, like this, see where your stop loss is going to be at the last candle that did the crossing. But if you choose to be very, very disciplined, or you want to minimize your risk, you can put your stop loss somewhere around here. But the rule says the candle that makes the crossing, which is this bullish candle, your stop loss should be up below it. Then you buy up to when you want to exit the trade. That is how it is. If you use your mobile phone, it's still going to show you the same thing. You add your 14 EMA, your 50 EMA, and your 200. Now, there are two things about these 200 moving averages. That is, it acts as support. I told you it acts as support and resistance. If you want to use it on a higher time frame, that's when you can add the 800. The 800, you know what? I can't add the 800 here because of this is a free version of TradingView. But if you're using your mobile phone and you add the 800, your 800 can be another take profit. So you wait for the crossing to happen, then at the tip of the 800, that should be your take profit. I'm going to show you. By the time I add it on my mobile phone, I'll do a screenshot and I'll send it to the group so you can understand what I mean by 800 being your take profit, because I can't do it here, so you won't understand it much. So this is just simple using this scalping strategy. Let me look for another pair, GBP USD. And I'm going to add it. Okay, thank God it appeared. Now the first rule of the game here is what? You go to H4 and check where it's priced at a particular moment. It's showing us here that price is above the 200 EMA. So we should be looking for what? Buy opportunity on gold. For this, you can look for buy opportunity on gold. Now you come to the 15 minutes. You've missed the buy opportunity here because see where the crossing happened. The crossing happened around here. See, price went above all this. You can see how this is acting as support. The 200 is acting as a support here. So since we've missed the crossing, if you took this trade somewhere around here when the crossing happened, you can see, let me use this brush. When the crossing happened and your stop loss is somewhere here, you took it this area, you are buying up to your desired TP, or you keep buying till price does what? Closes below this or below this, and you exit the market. So now there's something here. Price has crossed below my what? My 14 and 50 moving average. Now this 200 is going to either act as a support or as a resistance. So if this price comes down and closes below 200, it did not close above the 200, it did not close below the 200. It's telling me that I should expect more what? More buys from it. Remember, we've gone to the H4 and we've seen that price is above the 200 moving average. So we should be looking for more buy opportunity. Now, this is another opportunity for us to look for more buys opportunity here, because we missed the crossing there, down there. Price has crossed here for us to do what? Continue selling. But because this H4 is telling me that this is still what? Buying, what should I do? I should hold on. But until this price crosses and closes above this, then it tells me that yes, the sell is now valid. I know some people would like say, I'm seeing an M pattern here. No, someone was asking me about gap. Now, please, can you take a look at this place? This is what a gap look like. Who was asking about gap? Please take a look at this now, what I'm about to show you. Now you can see how price did what? Close here, and the thing price opened. Let me hide this. Let me hide all these things. Now this is, look at it. I need to hide this. Okay, someone asks of gap. You can see the gap between this place here and here. You see there was no price in between this place. That is what a gap is. See another gap here, here and here. You can see there was no what. That's what a gap means. So imagine you having a gap of, let me check how many pips gap is this. This won't be much. Oh, it's actually much. This is 53 pips gap. So imagine you having 500 to 600 pips gaps. That is something of this nature. I still have to go up. So this is what you're going to see. This is about 500 pips. That market will open here and it will leave when it closes around here, it will open at the tip of this. So all through that place, there's no price action there. There's a big gap. So that's why it's always advisable to close for the year and wait to open a new market day when the market opens. So the person that asked about the gap, do you understand what it means now? Please show me by typing on the chat box so I can know that we're on the same page. So, okay, Frances, do you understand what the gap means now? Beautiful. Okay, good. So now we missed this crossing for GPP, JPY. So what are you going to do now? Because it's still above according to this, it's still above my 200. So the buy opportunity is still what? Valid. If I even zoom out on the chart, you can see that price has always been above the moving average all this while. Price closed above it and it's still up. So we're looking for more buy opportunities on this pair. It has created new high. You can see this was the previous high, but now price has broken it and created new high. So we're looking out for what? More buy opportunities based on this strategy. Now you go to your 15 minutes and you look for what am I going to do here? Remember I told you the 200 acts as support and resistance. So what I'm going to see on this chart when market opens tomorrow is either price will drop and close above the 200 moving average, which if that happens, it indicates that you should just like here now, you can see how price close above it, acting as a support. I'm sure everyone can see it. Price closed here, acting as a support here. So if the same thing happens here, price closes above the 200 moving average, then you should look for what? How to buy and take your desired pips. Then if price closes below the moving average, you should wait and see what happens. But if this is something like this, as it's just here, looking at the left, how this acted as the support and price kept bouncing up to this place. If it happens the same thing here, you should wait for price to do what? Price action. That means if price happens and closes above the 200 moving average, your TP will be the few pips here, and you take your desired pips up 50 pips. And remember, this is scalping. You don't stay long in the market, and you do what? Continue your buy. But if not, you wait for it for 14 and 50 moving average to cross below 50 so you can enter. That is how simple, but you need to be dedicated. So many people have used this strategy to make so much. When I traveled to Akure, there was time I traveled to Akure, I just taught one is a former chairman, or what do they call it, commissioner of housing or something. He used to be a member of the educational platform I was before I came to Mega Pro. So I went there to teach him just this strategy, and he has used it to make money for himself. He said he doesn't like those complicated. There are some people that just want simple things. They just want to go in and out of the market. So as soon as I taught them this strategy, I can see that he has been consistent in it and he has been making money. But because I forget a lot, I might just take a trade and I forget. Like volatility, I lost $400 and something few days ago. I've stopped trading forex, but volatility works whether there's holiday or there's no holiday. You keep working. So I placed a trade on volatility 75, and I forgot to put my stop loss. You can't imagine. So even your teacher can make mistakes. So imagine you too. I forgot that I was even trading, and only for me to go there, and I saw that I've lost $400 and something from that market. It was very painful. One, I went against my rule. I set my take profit and I got carried away by the movie I was watching or something, or maybe a discussion, and I forgot to set the stop loss. Only for me to come back and I was left with how many dollars? $400 and something has gone out of my account. Like I always say, do not forget to put your stop loss. The first thing you should put first is to think about the risk of how much you're going to lose. So imagine me losing $400 and something. If I had withdrawn that money, I know how much what is going to impact in my life for this holiday. But I can't be crying over spilled milk. So learn from my mistake. First thing when you want to take your entry, look at your stop loss. Put your stop loss first before you do what? You take profit. So this is how this strategy works using the scalping tools. Any other question before I can move on? Any question? Because nobody's asking questions, so I believe everybody's actually following it. If you understand this strategy, please type yes or type 555. Type 5. If you understand what I just did and you can duplicate the same thing, type 5 on the chat box. Okay, good. Wow, so there's not much work to do there. Beautiful. Uzoma, you're here. Good. Please, man, this your last moving average didn't cross. I don't understand the buy aspect, but sell is somehow confusing. Okay, I'm going to show you the sell. I'll look for a sell. Ikechuku, I think I don't understand your question. Please, ma, this your last moving average didn't cross. Okay. Let me show you where it crossed. Look at the crossing here, Ikechuku. We're going to do sell, this buy. Have you seen the crossing? This is the crossing here. 14 cross 50. You know, we missed it here. That's what I'm telling you. Since you missed the main crossing here, what you should look for is how to re-enter the trade. Then remember I told you that 200 EMA acts as support and resistance level. So if this, let me delete this. Now look at the crossing here, this place. This is where the crossing happened. So if they had taught you this strategy earlier, you would have entered somewhere around here. And your stop loss would be somewhere around here. This is where your stop loss is. Maybe this is the candle that made the crossing and you enter somewhere around here. So your stop loss will be here and your entry here. You're looking at either 50, 70 or any pips. You continue buying until price does what? Either closes below your 14 or closes below your 15 and you exit the trade. But since we missed this, another thing is, for the fact that it's still on the uptrend on the H4, you can see the H4 here shows that the 200 price is still above the 200 EMA and it's creating higher highs. So what you would do on the 15 EMA is to wait for price to act as what? That this 200 EMA to either act as support or resistance. Now look at here. I'm going to show you where it acted as a support. Here, you can see it here. This 200 EMA acted as a support for price here. Price closed above it. So if you had missed here, this crossing here, and you saw something like this, you enter a buy. Because price has crossed here, which is the first indication that we are buying. So if you see something like this and you miss this, you enter a buy from here and you go out from your desired stuff. But since we have missed all this, if price that is currently a red candle closes above the 200 EMA, just like the same way it did here, we will still buy this pair up. But if it closes below, you wait and see that 50 and 14 crosses like this. 50 moving average and all that will cross above 200. Then if you go to 4 hours, you see that the moving average are bending to do more crossing. So when it crosses, you now look for your sell opportunity. This is buy, but I'm going to show you how to look for sell opportunity. I'll look for a pair that have the 200 moving average above it. So we'll look for a sell opportunity. So someone that said it did not cross, let me look. The place you marked 0. Look, it crossed here. Have you seen it? Ikechukwu, see the crossing here? Do you understand, Ikechukwu? Do you understand what I just did now? If you understand, type only Ikechukwu, type 7. If you understand. If you don't understand, say no, you don't understand. Okay, good. All right. So you can see the crossing here, what happened. And you know why you just need the 200 EMA is for the 4 hours to check where the trend is. Understand what is happening? What should you look out for? Buy opportunities. That's why you need the 200 EMA on the higher time frame. On the 15 minutes, then you go and look for crossing where the market has actually crossed, and you can see where the market crossed here, which is this place. Then you look for buy opportunities. Since price closed above my 200 EMA, it's giving me more confidence to take the buy because this is now on a support. So as soon as this red candle closes, I enter my buy and take my desired pips and exit the market. Or I decide to continue, like I said earlier. Like if you want to continue, you can't continue long because this price closed below this. But if you say you want it to close below your 50 moving average before you can exit the price, you are going to exit somewhere around here. So imagine you're still going to lose, maybe somewhere around here, sorry. Imagine you're still going to lose all the pips that you've actually acquired there. You cannot lose small pips. So what you can do with this strategy is give yourself a dedicated pips. I'm going for 50 pips. I'm going for 100 pips. It's a scalping strategy, so just go for shorter pips. But if you want to go for a longer, you want to stay long in the market, just wait till price closes above the 14 or 50, precisely 50 EMA, then you exit the market. So if this red candle closes like this, let's say you still want to buy, you pick it from here and you are buying, you saw something of this nature and you decide to exit when this candle close. Good, then you exit the market. But now another opportunity for us here is, but we have to wait for this candle to close before you do what? You know what to do. If it closes, if candle drops like this and closes here and act as a support, you pick your buy and take your desired pips. If it closes below the 200 EMA, you have to wait and see what price action does. If it keeps dropping, then you see how the moving average 14 and 50 will be doing what? Bending towards this area to cross. This one too will bend towards this area to cross. And by the time they cross, you know that you're looking for sell opportunity. But you have to go to the H4 and check if it has actually corresponded. This entry and exit is only on 15 minutes. The H4 is to know what you're doing. Am I buying or am I selling? I'm sure everybody understands that. Now let me look for a pair that is, let me look if I can see it sell. My chart is blinking. I need to know. Using this strategy, do we need to check the currency index? This is scalping. You don't need your currency index. This is scalping. When you want to check your currency index, you can, that's when you're looking for strategy. You want to analyze your pair and do all those things. Here is that you're just scalping. You're not staying long in the market. But if you want to stay long in the market, fine. You can use you can check your index. Beautiful. Now this is a sell opportunity. Can you all see that the moving average is above price? So what am I looking for here? Please tell me on the chat box, what am I looking for? Since my moving average is above, price is below my moving average. What am I looking out for? Good, sell. All right, beautiful. So we can see we've done for a buy, and then we're looking for what? For a sell. This is the price even crossed somewhere around here for the sell. You can see that this is the scalping strategy. You can see how price is crossing above, price is below, and all that. So if you are looking to stay long in the trade, you might just be going off. You'll be taking little pips and you leave the market. But you need to know the number of pips you want to use. This is scalping strategy. You don't stay hours in the market. You stay like minutes because your pips, number of pips are very small. My chart is blinking. Let me check. Yes, I said it earlier. The 200 EMA acts as support and resistance. If you look at the chart, I wrote it there. I wrote it there that it added support and resistance. Please, can we all mute our mic? Matt, can you mute your mic, please? Or do you want to say something? Okay, so you can admit people, please. Then now we understand that this is, the pair is coming down, okay? Because price is still above, price is below our 200 EMA. Now, two things is going to happen here. You can see that 14 is kissing 50 EMA. Two things is going to happen. It's either it's going to cross, and by the time it crosses, on the 15 minutes time frame, you'll be seeing an upward movement. But until these two are above this, price is above this, and moving up, then I can indicate that yes, the price has changed. You want to start going up. But since it's still below here, we should be looking for what? Sell opportunities. Now let me go to 15 minutes. I hope I'm still audible. Now you can see here that I want to know this. Okay, still recording. You can see here that pullback you are seeing on the 4 hours time frame is actually affecting the 15 minutes time frame here. You can all see that. But because we already have in our mind that the H4 price is still below our 200 EMA, so I should be looking more for sell opportunity. If you even use your trend line, for those with laptop, you can see what price is still going down. It's still on a downtrend. So pending that, let's see how we can act here. Let me look for the previous crossing that has happened for a sell. Then we'll see how it happens. Now look at the crossing here. This is a cross. Let me draw a circle. This cross has happened. 14 cross 50. Then we'll look for what? A sell opportunity. You can decide to go off. You can see how this sell continued downward until price came back and bounced off here and off here. So this is showing me that I'm going to stay in the market for a short period of time. If I take my 50 pips, let's say I enter the market around here. It's not even giving me up to 50 pips, 20 pips. No, this is not gold. I'm used to gold. Gold, if you see this kind of movement in gold, you know how much you're taking away from the market. So you can choose to take your desired pips and leave the market. But if you say, let me enter from here, and the market does this and closes above this and this, you need to exit the market because price has closed above your 200 EMA and all that. But you're not staying long. So when you see a crossing this way, you close the market. And when you see something like this, you know that the market is actually turning, because the main thing we're looking for is 14 to cross 50, and we do what? We sell. Let's look for another good crossing for a sell. Okay, this one here. This is a beautiful one. Or this one exactly. This is a crossing here. Let me circle it. You can modify it to anywhere you choose. It depends on how you do it. When a strategy is given to you, for you to know that you're a good student, you can modify it, tweak it to how you want to do it in your own way. Some people might say, oh, I saw a crossing and let me just take it and scalp, even if it's 5 pips and all that. So now a crossing happened here, 14 crossed 50, and you took your sell, your stop loss is somewhere around here, above here, and you keep taking your pips. Let's say you saw this crossing here, and you decide to take your 10, 20, 50 pips. This is where the crossing happened. Sorry. Your 50 pips should be somewhere around here. Somewhere around here, and you're off the market. If you choose to do it the other way, I told you that, okay, yes, when price closes above, you will exit somewhere around up here. You will lose some other pips too. You lose more pips that you've already taken. So it happened, the crossing happened here. You started selling and it went up. So where you're going to go with is just 27 pips. But if you choose to enter again after this crossing here, you see there's a new crossing here, and you choose to enter, this is what you're going to see. You take more pips and you leave the market. This is about 100 and something pips. But since you are on the trend, you will still see more sell opportunities for you to enter. What we have here is what on the H4, that the market is on a downtrend, because 200 is what you can see it here. It's acting as a resistance here. After the crossing, it came here, price did what? Closed below it. It did this again, came here, closed below. Even after I closed up here, it did a fake breakout. It came back in and did this. Look at here again. So what's going to happen here before I can either take this trade? If market open, I might not choose to take this trade because I'll wait for something like this to happen. This price to go up and close below my 200, just like what you did here. Then I should expect a drop. But if you close above my 200, I will expect this 14 to cross 50 and come all the way up here. And this one too will cross 50 and come all the way up here. Now, I want you to understand this. No matter how this crossing happens, there must surely be a retest. There must surely be a retest. That's why the way I taught you guys support and resistance zone, rectangle strategy with this. You will need the knowledge of all the things you have to apply even in your scalping strategy. So no matter how you break, just like we are seeing the break here, you will see a retest before the drop. So even if this market decides to start going up and price 14 and 15 crosses above 200, you will still see a retest like this before price will do what? Continue going to the upward side. So if you understand the sell part of this strategy, can you type 8 on the chat box? If you understand the selling part of the strategy, can you type 8 on the chat box? Before I continue. Okay, only Jeremiah and Toby, only 2 people, and Ibrahim. If you don't understand it, say I don't understand it, so I can repeat it again. If you don't understand the sell, like I said, this class is going to be very short because the scalping strategy we're using. Now we still have the spirit of the holiday enough. So let's enjoy the holiday. Ikechukwu Martin said, I don't understand. Yes, we will see a retest. Is it on the 15-minute time frame? Yeah, you see the retest on the 4 hours time frame. You also see it on the 15-minute time frame. Everywhere any price action, you must surely see a break and retest. But if this breakout happens now, let's say that price keep going up. Let's say that price did not close below this 200 EMA and it breaks out. Bakari, I'm going to do it again. Don't worry, don't cry. And it breaks like this. Even if the 14 and the 15 moving average comes above 200, you will see that price will come back and do a retest, either on the 14 or 15 moving average before it continues its movement up. It must surely do a retest on any time frame, both 4 hours and 15 minutes. But to be on the safe side, you wait for it on the 4 hours. Then you go to your 15 minutes and look for what? Buy opportunities or sell opportunities. You look for buy opportunities or sell opportunities. So let me explain it again for the benefit of Bakari and Ibrahim. The person that asked for a retest, Francis, do you understand what I said? I think I need to show you a chart so you can understand. Let me show you on a chart. Now you see this crossing here. This crossing. Let's assume this was the first crossing that happened here. Let's look for a first crossing that happened for a sell. Let me look for a first crossing. Okay. It was a buy before it became a sell. Okay, here now, beautiful. Now you see that price was above the 200 moving average here. Now look at it. Here, price was ranging and it was above the 200 moving average. And it continued this way, then this crossing happened. This crossing, but that will not tell us if price actually changed or not. But what happened again? Price closed here below our 200. Now, which tells us that is now on a selling spree. Now, look at this movement that happened here. Here, you see the downward, then look at the retest. Here, price came and retested here before all these drops started happening. So you see, even as price came down here, you will still see a retest. Price will go up to retest at either 250 or 14 before you can see another movement downward. If I zoom out this chart, I don't know why these things. Okay, if I zoom out this chart, when this crossing happened, you can see this retest here before this downward movement all the way here. So no matter what happened, price will still do a retest. Then before it comes down. You understand? Did you see it on the chart and do you understand it? Yeah, the retest I told you on 15 minutes. No, I just showed you. Okay. I think this question was the previous question you asked. Okay. Okay, yes, you understand it. So beautiful. Now, for the two people that say they don't understand, let me do a recap. Rule number 1, go to the H4 and check where price is. And how do you know where price is and how do you know where the trend is? You need to know where 200 EMA is. If price is below the 200 EMA, it indicates that we're looking for sell opportunities. Just like what you're seeing here, price is below the 200 EMA. You can see it clearly here that price is below the 200 EMA. So we know that we're looking for sell opportunity. But if price is above the 200 EMA, we're looking for what? Buys opportunity. Now, looking at this chart, you can see that price is below the 200 EMA. Maybe I should look for another pair that is GPPNZD, because this one has so many long. Okay, this is a beautiful one. Let me delete this. Let me delete this rectangle. Now you can see this. Price was below this, then it came above. Now this is where price started coming downward here. So you can see clearly that price is what? Below the 200 EMA. So we should be looking for what? Sell opportunities. This is GPP NZD. See here, price, let me draw. Price was above the 200 EMA. It indicates what? More buy opportunities. But as soon as price came down here, it started giving us what? Sell opportunities. When it crossed, it gave us buy opportunities. It crossed here, sell opportunities. Went above here, buy, then what? Continue the sell opportunity. You can see it very clearly. Now I know what to do. I'm going to hide 50 and 14. Okay, now for those the two people that said they don't understand. Now this I've hidden the 14 and 50 EMA. This is just 200 EMA. Remember I told you if price is above, we should look for what? Buy opportunities on the smaller time frame, which is 15 minutes. If price is below the 200 EMA, we should be looking for what? Sell opportunities. Now you can look at here. Let me reset it. You can see that price has been what? Below the 50 EMA. This one even did a fake out and did what? Continue. This candle did what? Closed below. And this previous candle also closed below the what? 200 EMA. Now I'm going to go to the 15 minutes and we should look for what? Sell opportunities. Now this is a beautiful one. I'll open 50 and I'm going to open what? 200. Now, since this is a very beautiful one. We've seen that there's a crossing here. This is a crossing. Let me circle it. You know, in our mind, we already have an idea that we're looking for sell opportunities because the 4-hour time frame has shown us what? The sell. So this is where the crossing happened. 14 cross 50. So we enter around here. This crossing happened, you entered here. Your stop loss will be what? Here. Now, your take profit, like I said, you can either close depending on the pips you want to do. See, this can give you somewhere around 50 pips around here. Your 50 pips should be somewhere around here. And you're out of the market. But if you don't go out, this news did what? can see what happened. It spiked up this candle, spiked it up a bit, but still did what? Came down to close. So if you don't want to close using your desired 10, 20, or 50 pips, and you say you're waiting for price to close above your 50 or 40 moving average, you can still have the sell. Now, this is a fresh crossing, so you should be looking for more sells on this. So if the market open, you can place your sell. But if you place your sell, your stop loss should be this one here, above this wick. But this is a beautiful crossing, an easy one for you to see a sell. First, we identify the crossing here. So assuming this has not happened, and you saw this crossing, you enter your sell. You can go out from here using this 200 as your take profit, the 200 EMA. You can use it as your take profit, and you exit the market because it's scalping. Just if you put your TP here, you're out of the market. Remember, you're using big lot size, and you're out of the market. Very good. You don't need to stay long. If you can practice this strategy, this is very, very simple, but I'm telling you, some people will still, it's going to be very difficult. Some people will get greedy. But if you can focus and practice it, just see the crossing, take your 30 pips, small pips, and you leave the market consistently. If you are doing 30 pips, 30 times 5 trading days, that is 150 pips. If you are using 0.1, that's $30 times 5. That's $150 in a week. You times it by the current $500 exchange rate. If it has not reduced or increased, I don't know. So that's 150 times 500. That's 75,000 in a week. I'm just doing a scenario. If you choose to increase your lot size, depending on your accounts, one standard or what, depends. You take, if it's one standard, that's $300. 300 times 5, that's $1,500. $1,500 times 500. In a week, $750. That's okay. So you can see how 30 pips can give you more money. Only if you are disciplined and you're focused and you're consistent in what you're doing. But before you go live with this thing, practice it on your demo. No matter how professional you are, any strategy that's given to you, always practice on your demo before you practice on your live account. Always practice on your demo before you practice on your live account. But wait to see this crossing to happen. We already have an idea what we're looking for. That GBP NZD on the H4 has told me that price wants to start coming, that its price is what's selling. It has been on a downward trend since. But until these two, 14 and 50, is above, price is above this, then it indicates that the market wants to start going up. You have to wait and see, or you enter the market. But for the fact that it's showing me like this, it's still telling me that price is coming down. Price is coming down. So you can practice this on your demo account, GBP NZD, tomorrow as soon as, today, market opens by 11 o'clock. And you see what's going to happen in the market. There'll be a drop. So your stop loss can be here, above this. Then you take profit, you calculate what you want to do. Sorry, my chat is blinking. Bakari said thank you. You're welcome, Bakari. So do you understand that for the two people, who are the two? Sorry, let me check the name again. Two people said they don't understand it. Let me check for their name. Okay, Bakari was among it. Ikechuku, do you understand it now? Understand better, fine. Ikechuku, okay, beautiful. So I think I've done justice to this strategy. So you can, like I told you, you can put this moving average, this indicator on your mobile phone. On your mobile phone, you can do it on your mobile phone. If you want to see how far the trend is, you can just turn your phone to be in a horizontal form, so you can see on your 4 hours the trend. But with this on your mobile phone, it's easy for you to trade and you just rest. Imagine, like I said earlier, you have a portfolio and you're going for just 30 pips using this strategy. You wait for a crossing, the crossing happened, and you did this. 30 times 5, that's 150 pips in a week. 150 times 4 weeks. 150 times 4, that's 600 pips in a month. If you are doing 600 pips on 0.01, that's $600. Oh, sorry, $60. If you are doing it on 0.1, that's $600 in a month. If you are using a standard lot, that is $6,000 in a month. If you are using 10 lots, that is $60,000 in a month. All you need is just 30 pips to achieve this in a month. If you are consistent, you are focused, trust me, you can achieve it. Practice what I just taught you for like a week or 2 weeks on your demo account. Then you can see what I'm saying about it. It's simple, but it's very difficult for people to do it. But if you can be disciplined, you'll make money. There's so much money in this market. Any other question? Please, my recap about the 14 and 50 crossing. No, you can use any color you want to use. You can use any color that you want to use. I just use this color. You can use any color. Have I answered your question, Ikechukwu? Please, which one will cross the other? Oh, 14 has to cross 50. Just like this. Like the blue color is 14, the red color is 50, the black color is 200. So since 14 has crossed 50, what are we going to do? We do an instant execution sell. Remember, the strategy is go to 14 to 4 hours time frame and check what we're doing, where the trend is. And we came to the 4 hour time frame and we saw that the 200 price is below the 200. So which indicates that we should look for sell opportunity, not buy. If price is above the 200 EMA, we should look for buy opportunities. But since price is below the 200 EMA, we should look for sell opportunities. Now we come on 15 minutes and we'll check what happened in 15 minutes. We've seen that price has crossed here in 15 minutes. 14-day exponential moving average has crossed 50-day exponential moving average. So what are we going to do? We do our instant execution sell. Remember, I told you this is a scalping strategy. You can choose to take your 20 pips, your 30 pips, and you're out of the market. So this crossing happened and you decide to sell from here. Let's say you took your sell somewhere around here, this candle. This candle here, let's say it's around here. And you come up and you take your 30 pips. 30 pips should be somewhere. Remember, this is GPP. They have longer, 30 pips is here and you're out of the market. The best pairs to use this strategy for is pounds and gold because they have longer pips. Little move give you longer pips. So the best thing to use, if you are doing it on the other pairs, they're going to wait. You can see all this long move. By the time you calculate it, maybe you're seeing 20 pips of that. But if you see something like this, if you want to use the other exit strategy, let's say this is a buy. We're thinking of buying. We saw a buy on the higher time frame, and you saw this crossing, and you decide to buy. So let's say you put a buy here, and you want to exit as soon as price goes below your 50 or moving average. You've done how many pips? 139 pips before you exit the market. Or let's say you exited here. Let me do that again. I'm just giving for this educational purpose. Let's say you did this. You stay buying it, and you exited around here. This 100 over 100 pips, and you're out of the market. So this is just a scalping tool. You don't need to stay long in the market. 30 minutes, just wait for the crossing. First, go to the 4 hour time frame and check where price is, how price is moving. Is it on the upward trend based on the 200 EMA, or is it on a downward trend? As soon as the 4H4 is giving you a go ahead where the trend is going, go to 15 minutes and look for crossing, and you enter the market. Like for GBP NZD currently, if the market opens by 11 o'clock today, I'm expecting a drop. because all indication there's a crossing, is still below the 200 EMA on the 15 minutes, so I should be expecting more drops from it. But if the market decides to gap, if it gaps and it did not gap above this crossing, the sell is still valid. Remember, this is 15 minutes, but we should look for what sell opportunity on GBP NZD. Do you understand? Ma'am, did you hear of news? This is not MBA Forex investment platform. And MBA Forex investment platform, I heard of it, but any investment platform that is not transparent, that you cannot see the trades that they are taking, they were never trading. They were using the money for something else. According to those who invested in it, yours is to just buy, pay money, and they give you percentage every month. You're not seeing what they're doing, so they're not trading. They're using your money for something else. If you are seeing what they are trading, you see how the market is moving, you're seeing the losses and all that, then you can say that yes, they're using your money to trade in the forex market. But as far as MBA Forex is concerned, I don't think they were actually trading in the forex market. I think that question is answered. So if your investment is there, sorry. So I think I've answered the question. So that will be the end for today's class. So we need to call it a day. Go and practice what you've been taught. Then we'll see how we can take it up from there. Mr. Matt, is it Matt? You can stop the recording, please. You're welcome, Toby. You're welcome, Bakari. You're welcome, Ikechukwu. Thank you. You're welcome.